Good morning, or good afternoon where we are now, just at 2 minutes past 12. Welcome everybody. We have a wonderful group of people from all around Australia tuning into our ACBC Victoria online export seminar. I'm Virginia Birrell. You can't see me, but I am here and I'll be listening in for the whole session. We're pleased so many of you are joining us here on the webinar on getting your goods to China and what's changed, and certainly what's changed in the last few days, weeks and months. It's been amazing. Just to let you all know, we are recording this session and we will have it available afterwards for you. And also I do encourage you to ask questions throughout the session. There is a questions box and we'll get through those at the end of each presenter's presentation, or through as many as we can if we have time. I'm delighted to welcome our 4 talented panellists who will take us through today's topic. Given our short timeline, I hope they won't mind me skipping their full bios, but I want to leave plenty of time for their expert presentations. Firstly, we have Diane Tipping, the Chair of the Export Council of Australia, Brendan Burke, the CEO of the Port of Melbourne, Australia's busiest container port and members of ACBC, Richard Young, Director and founder of professional logistics company Rex Services, and Bill Cole, international trade expert and partner at BDO, our members, who are kindly hosting today's session on their go-to platform. Madison from ACBC is behind the scenes and she'll help field questions throughout so that we've got a good selection for you. I now have the pleasure of handing you over to our first speaker, Diane Tipping, to give us her overview on the current export market in Australia and trade relations with our largest trading partner, China. Thanks, Diane.
Thank you, Virginia. Hello, everyone. The Export Council has been established for over 60 years, and we've been asked to speak today about moving goods to China and a little bit about the supply chain and the issues that are currently and have been experienced in the last few months. Next slide, please, Kate. Next one, please. Always have to have the disclaimer there. The Australian government has, I think we skipped a couple of slides, but just let me go back about the Export Council. So the Export Council has been established well over 60 years. We are a not-for-profit membership organisation, and we have a really wonderful advantage of being able to speak to many, many exporters about many, many things. Now, currently, we have spent the last 2 months speaking to all of our members and other exporters, all exporters, about the issues they're facing with not just China, but anywhere, and how they're experiencing the system and how it works and what are their challenges at the moment. Without doubt, the main issue that everyone had at the top of their list, and there are many issues on the list, I can tell you, but the main issue is about freight and logistics. Many of the exporters experienced a stop in their freight and logistics for a short period of time. They have got back into the system, and I'm very proud of the way exporters have risen to the challenge and tried to keep their avenues of trade open. This included both incoming goods for, supply chain components and systems to make their goods, but also just to get their goods back into the overseas market. And they have worked really hard to do that. But the issues have been freight and logistics, and I'm sure Brendan and Richard will talk a lot about those perspectives as well. But from our perspective, there are a couple of things I wanted to raise, and that's about the stimulus packages that the Australian government has put in for freight and logistics, and some other things, but particularly for exporters. So we have gone back to the front slide. It's a little bit about what the Export Council does. We are now back to the stimulus package for export support for exporters. So the big export stimulus package that really was dedicated to freight and logistics was the IFAM package, the International Freight Assistance Mechanism. And it has been really, really helpful. It's as you can see, it was a $170 million boost to the export sector by relaunching hundreds of flights. Now, Brendan will probably talk about this, and I do talk about it a bit in a minute, but sea freight has been affected, but not to the level at all of air freight. And so the Australian government felt that this was a necessary export support that they needed to do, and it has been taken up quite well. You will see there that if you read the slide quite much on the third sentence down, you will see that it's dedicated to agricultural products, livable products, and this really comes about by the fact that we have products that don't have a timeline on when they can wait to be exported. They are seasonal, they are shelf life products, and they need to get into overseas markets. So it was a very timely package to get a lot of things like seafood, meat, vegetables into a dairy as well, into those overseas markets, not just China. But it has been a godsend, especially with getting in such a lot of food products to overseas countries. If you look at the list of flights there, this was current as of last week. And the interesting thing is that the Sydney to Shanghai one-way flights, new flights, are now being organised. This is really, really helpful. Getting into China in some way has been a difficult aspect with air freight, and moving to have these flights available will be really, really helpful. It doesn't mean that there are not other flights, and I'll talk about that in a minute as well, to export to other countries, but this is a dedicated system that is not just funded totally by government. Exporters have to put in some funds towards the air freight as well, which is a fair component when there are no flights available and the Australian government is doing everything in their power to get flights available. So it is a 50-50 type situation where there is some funding from the government and exporters put in their funding as well. The system is run through Austrade, and you can't see on, or I can't see on this slide, but down the bottom you will see a web link that will actually give you the information. I think a lot of people that are in that particular industry of livable products and agriculture will know about this system, but in case you don't, there's some information there for you to look at. I would always say that you need to talk to your forwarder and get their advice on how you manage this. There are limits on what will be accepted or levels of what will be accepted, but there are opportunities there to aggregate with other exporters and build a component of export product that will be suitable for these charter flights. Next slide, please, Kate. So the other two government packages are the EMDG package and the EFA, the Export Finance Australia, the old EFIC package. So the EMDG one is an extra, well, the government will inject an extra 49.8 million into the export market development grants for the 2019-2020 financial year. This is really, really important. I do hope, and I'm probably a little controversial here, but I do hope that it does go into the next financial year as well, but we don't have that commitment from government and we may not get that. But it is important to know that there are some extra funds available for exporters because there will be extra costs for exporters over these last few months and going forward. The Export Finance Australia package is an export capital facility, which is a loan, and it is only available for already exporters that are able to show that they have an export capability, that they have export markets and they have export contracts that they need to fulfill. Costs have been quite high to keep people in jobs, even with JobKeeper. Costs have been quite high to get products from overseas countries if you need componentry to build your products in particular industries. Costs have been high for freight. So if you need assistance with a loan, if you need assistance with this export facility, EFA are there to talk to. Next slide, please. The sea freight outlook. So Chinese factories and offices did shut down before the COVID-19 period. We do have to recall that the Chinese New Year is always a quiet period and lots of ships don't sail during that time, and if they do, they tend to have sailed just before or go in just after the Chinese New Year to pick up cargo. The problem with the COVID-19 pandemic was that the Chinese New Year started a little earlier, regardless of when it should have started because of the COVID-19. So ships were not able to load the last lot of cargo to come out of China before the close down. They were not able to get back into China. And you can see from my slide that for perishable exports going to China, they weren't allowed to dock in most Chinese ports. They had to sit off anchor at these ports and wait for the availability of getting back into those ports. China completely shut down, so it was very difficult for cargo to come out and cargo to go in. There are many exporters that had cargo sitting on a wharf, ready to put on a ship, frustratingly not able to get their cargo. Then that becomes a bit of a butterfly effect. They're not able to get their cargo in Australia. They're not able to make componentry to get back out. So they're feeling the effects of that now, not just at that time. Since mid-March, the situation for sea freight has continued to improve as the Chinese ports have opened up. Factories and offices are opening again in China with a bit of a lower capacity, but getting weight a bit back now to just over 90%. I'm not going to say it's 100% back to normal, but they are getting back to near normal levels. Most ports have cleared the backlogs. Rates were steadily increasing with congestion. So the sea freight rates did increase, as they do around the Chinese New Year period anyway, and around the Christmas rush periods. They are slowly coming down a little bit, but I don't think we have the competitive sea freight rates that we had during the middle of last year and before this period all happened. Most ports have cleared the backlogs. Rates, as I said, were steadily increasing, but are coming down. Most essential products are moved by sea freight. So in terms of possible continued disruption to daily operations in Australia, this should ease as the world continues to come out of the isolation lockdowns. Currently, there are strong vessel bookings going into at least the next month. And I think this is on the back of we've been buying a lot in Australia. We've been buying a lot of products, whether it be online or not. We're really keen to buy some things. We've been really good at the supermarkets, and a number of our food products are imported as well. I don't know how the orders are going to go for vessel bookings into July, August. Brendan might have a better concept of that than me. But it is a month-by-month situation at the moment. I still think that sea freight will continue to move. It's moving all around the world. I do know when ships are calling at other ports, just like any in China, there are delays. When you're looking at a ship going into, there was one in Brisbane a few weeks ago that I had. I'm an exporter in my own right, and I had cargo on. It called into Brisbane on the 30th of April. It didn't leave Brisbane until the 4th of May. Now, I don't know if it had engine trouble. I don't know if there was congestion. I didn't look that all up. But at the end of the day, that's what's happening in a lot of ports. There are delays in vessels getting berths and then getting back out. It is getting better, and that was a month ago nearly to now. So I'm sure that unless there was an engine problem, that won't happen again going forward. Going forward, I think sea freight is looking better and will come down in rates, but not quickly. And we do need to ensure that we make bookings so that we know the vessel will come in. There are a number of blank sailings happening in the world where ships are not getting the bookings and they're just not going into ports, or they're moving around ports to other ports. So we do need to think about how we're going to move our cargo, and we do need to plan how we're going to move it. And if it's going sea freight, we need to make sure we know what vessels, and we plan what vessel it's going to go on. It won't be any of this last minute, it'll be right type situation for bookings. Next slide, please, Kate. The air freight outlook, well, very different, very different. As we all know, the bulk of air freight around the globe is moved in the belly of passenger aircraft, and air freight represents only 1% of global trade by tonnage, but 35% of global trade by value. So it is a big hit to revenues of many thousands of companies, including exporters who use air freight within Australia and from Australia. And remember, a lot of this air freight issue is going to be, and supply chain issues are going to be domestic as well. We're opening up some of our borders, so it's getting a bit easier to move cargo across borders in Australia. But if we're having trouble in Australia, obviously we're going to have trouble moving it across a border into other countries. The implementation of bans on passenger travel has all but slowed down the movement of cargo by air. And it's something that the Australian government did, but necessarily had to do that. And I think we're all very proud Australians that they did do that. Only a relatively small amount of cargo was getting shifted or is being shifted on dedicated cargo aircraft at the moment. Demand for air freight is so high that some operators are charging, though, up to 5 times the normal rate per kilo. And that's very expensive. If you have a contract in another country and you've had that contract for 6 months, 8 months, a year, or even just before this all happened in February, it's very hard to say, I can't honour that contract, I can't afford that contract. These are things you have to think about, and these are things that need to be really planned going forward. So the outlook for air freight is heavily linked to the restarting of the international passenger flights, and I'm not sure when that's going to happen. I wish I had a crystal ball, but we're only talking about a bubble between Australia and New Zealand, maybe in August. So, you know, normal passenger flights going back to what they were pre-COVID, it's going to be pretty much an end of year before it even gets considered, in my mind. So it will be slower recovery period than with sea freight. Exporters that have contractual obligations on high value products are turning to dedicated freighters, which can fly to alternate ports and then look to move cargo by road or other means to its final destination. Remembering not all planes are going to every destination at the moment. We don't have that choice of, I want to go to Dubai today, I want to go to Shanghai tomorrow, I want to go to Hong Kong. We have to take what's out there, and it is tough. That's where a good freight forwarder, a good freight freight shipping service can help you with all of this. You need to talk to the experts. Businesses need to stay in touch and to ensure that they are informed about their air freight capacity and availability. Next slide, please, Kate. Future outlook. Well, COVID-19 has been an enormous risk to the global economy and individual businesses in every country. The importance of assessing your current supply chain and identifying any vulnerabilities within it has never been more important. And the risk to a business long-term from COVID-19 is now very apparent. Supply chain disruption and risk mitigation. What can we do? How do we work with this? How do we now look at this all differently? I would suggest that you carry out an evaluation of your current supply chain, evaluate your extended supply chain network. You should be able to identify every point in that supply chain and what party is responsible at every stage. Any lack of transparency should be viewed as an opportunity to improve the chain. Investigate alternatives. This could include alternative logistic pathways, shipping lines, airlines, land transport, and other service providers. From the evaluation, you should then develop the following time-based actions. Short term, now. What is the risk profile? Identify the risks. Medium term, plan for possible changes. Long term, implement your new possible supply chain model. And these shouldn't be done over a year. These should be done now. You should be looking at your short-term problems. You should be looking in the medium term, how can I change them? And in the long term, changing them if you have to. Okay, next slide, please. Having a plan, planning for the future. If you've not already done so with your current export plan, it is now time to do that. What actions should are industry leaders taking now? Quantifying the virus impact relative to supply and demand disruptions, both today and longer term, and future market performance. So you need to quantify that. You need to conduct planning exercises to understand the operational implications, financial and non-financial. So it's not just about getting goods somewhere, but the financial aspects of that are important. Can you afford to do it? Can you afford to meet that contractual arrangement? Understanding that global businesses operate across all modes of transport in a diversified model, but we are exposed in some sectors such as air freight, which equates to a large chunk of total export revenue for Australia. Planning to mitigate these risks now for the future. Next slide, please, Kate. The ECA, as does the ACBC, has specialists looking at government initiatives to ensure we utilise the resources made available to businesses and individuals so we can continue to do business. Talk to the ECA and ACBC about what we can do, how we can help, how we can advise, what options there are available to you to move forward. We also at the ECA have a checklist for COVID-19 that may assist, and I've given you the link to the website page for that there. Thank you. I hope this information has been helpful, and I look forward to some questions. Thank you.
Diane, thank you so much. I think we may, if we move on to Brendan. I'm just conscious of timing, and we can perhaps catch up with questions at the end if you're happy with that.
That's
Brendan,
fine. Thank you.
Thank you. Thanks, Diane. That was just wonderful. Brendan, if we perhaps move on onto your presentation, that would be appreciated. Thank you.
Yeah, thank you. And I think Diane has spoken a little bit about some of the things that I'll cover, and so I'll just reinforce some of the observations around the early part of the year when COVID first took hold. So maybe just go through to the next slide, and I'll just give you just a quick snapshot of the Port of Melbourne. We are Australia's biggest container and general cargo port, so about 3/4 of our trade is in containers and about 1/4 in bulk product. And so in terms of containers, we handle about 3 million per year, and that's about 1/3, just over 1/3 of Australia's total container trade. So in terms of size, we contribute $7.5 billion to the national economy. Around 30,000 full-time jobs are supported by port and the supply chain. Operate 24 hours a day, 365 days a year. And the benefit of the Port of Melbourne and its location is that it's centrally located and has got all of the right connections to where freight is destined for or sourced from. So that's a bit of background, but now just on the next slide, please. I thought I'd just give you a bit of a snapshot around trade with China. So around 40% of our container imports are sourced from China, and in number sense, that's around sort of 673,000 containers a year. I've got a graph here mainly to give you an idea of what the impact of COVID has been this calendar year, and I've got a couple of years here. The blue represents this financial year 20. The yellow colour is last year, and then the green just represents so the numbers back in financial year 2016, so 4 years ago. And you can sort of see there that we have had growth over that 4-year period. In terms of import growth this year, if you go from left to right, you can sort of see that we've tracked on or about last year's sort of volumes on a monthly basis with a bit of variation. There's probably already some softness in the economy last year, which is why you don't see a defined growth in that first sort of 6 months of the financial year. When we hit January, you can see that we have had a reduction below last year, and we did expect January to be a bit lower than last year because the timing of Chinese New Year meant that in January last year there was a lot of goods that were pre-delivered in January. This year we expected some of that to be pushed out into February. We also sort of saw the impact of other things like bushfires, and I'll talk a bit more about that on the next slide when we get to sort of exports. But you can see here that there's been like a reduction last year, and I'll talk about the numbers in a whole of port in a moment. On the export side, you can sort of see there's a marked sort of difference here in terms of the outcome. I've got an extra year in here in the grey, which was 2 years ago, because that was the year before the drought, and we had a really good export season through the back part of 17 and into financial year 18, and that's why the number from 2 years ago is higher than the last 2 years. But you can sort of see there in January there was a marked decline, probably more pronounced than the import side. One of the elements in there is the bushfires, as we all know, occurred in the late in the year and into January, and that impacted a number of export categories, particularly sawn timber that goes to China. And you can sort of see there's been a gradual recovery over the last sort of couple of months, approaching, but not quite. The trajectory is right in terms of sort of moving up to last year's numbers. The next slide. Just yeah, let's move through to the next slide. Yep, there we go. So one way to think about what has happened what is happening and what's coming is to think about the situation in 4 different waves. So wave 1 is consistent with what Diane had mentioned, which is we had supply constraints out of China as COVID took hold and that shut down the port and the manufacturing and the supply chain. And so that we saw that in February, our numbers compared to last year in an aggregate trade sense were 10% below the prior year. And we saw only probably some element of that because there's the delays in what happens in China and then the shipping time to get to Melbourne. So 10% lower in sort of February, where we expected that probably to be higher than the same period last year for those reasons I mentioned earlier about the timing of the Chinese New Year. So February definitely bit in terms of those issues out of China. Then we moved into what we call wave 2, which is return supply. So as the Chinese manufacturers have come back online, those shipping services have resumed, we started to see some growth in numbers. So March, we finished pretty much online with the prior year. So pretty much a little bit higher on exports, a little bit lower on imports, but overall about the same volume. So that was quite good when you see other industries and the impacts that they had through that period. In April, our numbers were around 10% lower, and that's because we had dealt with the majority of the backlog that had occurred through February and March out of China, and we're back to sort of like a number that reflected about what was going on in the economy. And you could sort of see here on this on the graphic where I think we're sort of transitioning out of wave 2 into wave 3. Just to reinforce some of the elements that Diane mentioned about shipping line services, we do get blank sailings. In other words, the sailings that would normally go every week, one of those gets effectively held over, and so it's missed a service. So last year, we had around 15 between January and April. This year we had 30, and 22 of those were told to us by the shipping lines related directly to COVID and the impact with volumes on that. So we had a total of 30 ship cancellations. So I think we are moving into into this third wave, which is suppressed demand. We know that from some of the material on trade to date for May, we're probably tracking no better than April. So we're probably in the 10 to 15% down from the corresponding period last year. And we're moving into what is typically low seasons for trade anyway in June and July as we ramp up in the new financial year, particularly in through the August-September period, as you start to see trade increase towards the end of the year. So we do expect the outlook for the next few months to be soft, particularly with forecasts of a slowing domestic economy. I think that it would be probably the question mark there is, that suppressed demand and trade, how much will that reduce and for how long? We know that the port sector, generally there's a lag effect because by the time you have, from an import perspective, trade orders put through, so that go through the production and the transport phases, it does take a little while to get here. And so whilst we weren't as exposed as other infrastructure sectors in the first part of this, I think some of the others might recover a little bit quicker. Just to give you some things where there's been almost like an immediate sort of impact, like aviation jet fuel, no surprise with what Diane said about aviation, that has very little use of that. That's down about 80% in relation to normal volumes that come through the port. And there's not too much happening with motor vehicle sales. So there's reductions, quite large reductions in the import there, and there's a lot of storage on the port because of the lack of sales. So I think that we're definitely moving into this suppressed demand phase, and I expect that will last for 3, 4, maybe up to 6 months. The extent of it really is going to be dependent on the Australian economic activity and retail sales, and for exports, how the main countries that buy our product, how they get through their economic growth. Domestically, employment levels and population growth will have a big impact on imports. And we did hear, similar to what Diane said, that there is going to be some good orders, at least for those retailers that are exposed to online presence, and also some ordering pre the end of the year. But I think in aggregate, it's going to be lower than last year. So overall, lower trade in the short term before we get into, I guess, the fourth phase, which is recovery. And I expect that it's going to take, I guess, some time to return to 2019 activity levels. We think it might be a year or so before we get back there. And so the one thing that's really certain, I guess, is that whilst you know, this issue is quite traumatic in terms of the impact, you know, on COVID on so many levels. When you look at this over a 10 to 20-year horizon, which is how a port looks at trade, because COVID-19 over that period of time, you know, although it's very significant now, you know, will be seen in history as being just a retreat from the growth norm. And so I think we need to look through and recognise that history shows that each time we have these major events, there is a short-term over a 1 to 2 year period, and then you revert to long-term growth rates. So I would encourage people not to think that, you know, this situation we're going through isn't a reason to invest or to be confident about the future. I think that this is something that we'll work through. And, you know, the trend line on trade on growth, even when the GFC occurred, it was 1 year of negative growth, and then it reverted back to positive growth thereon. So from a port perspective, you know, we are dealing with the short term, but are planning for the longer term. In closing, I'd just like to think that for everybody's benefit, we get back into the recovery phase as quickly as possible. And so thank you for your time.
Thanks, Brendan. That's terrific. You're saying we're not going to have a snap back. It's going to be more like a J curve, I guess, from the
yes,
recovery.
I think I think I don't think that when you look at what drives particularly import trade, population growth, employment, that's going to revert to you know, historic growth rates. So I think that'll be reflected in trade. And so there is obviously a linkage between economic activity and trade as well.
Thank you. That's terrific. Thank you very much. If I could now ask Bill to say a few words from the perspective of international trade in relation to the accounting sector. Thanks, Bill.
Thank you very much, Virginia, and welcome, ladies and gentlemen. Slide, please. So, ladies and gentlemen, it falls to me to talk a little more about, I suppose, the mechanics of trade. And the previous two speakers, Diane and Brendan, have given a good account around the physical movement and aspects related to that of goods between countries. My piece is really going to be talking to the idea of what are the conditions on the ground when goods arrive, in this instance in particular in China, and what have we seen over the last 2 to 4 weeks in those arrangements. So what you see in front of you is a slide that I presented to the BDO partnership. Obviously, I'm the partner in international trade, as you have been introduced. What that means is that I have carriage in Australia of dealing with international transactions in their physical movement of goods, in terms of the regulatory barriers, costs, etc. And what I was asked to do at the very start of February for the partnership in Australia was to describe key risks and issues in international trade. And you can see there that I've got some heavily lined red boxes with terms like trade wars, Brexit, EU, World Trade Organization, the Persian Gulf and Iran, and coronavirus. Fundamentally, of course, that central box with the term coronavirus has now expanded to encompass the entire world and has subsumed all other issues in terms of trade risk, which, of course, was not predictable last year or even within weeks of the new year in 2020. So one of these issues has therefore grown in huge importance in terms of Australian economic activity and international trade. I don't need to remind you all that international trade is probably, on most estimates, responsible for about 45% of our national wealth. Our GDP is dependent upon it. So any of these impacts, of course, are highly significant to all of the things that Brendan and Diane have mentioned in terms of transactions, employment, etc., etc. So if we take the map of the world and consider the coronavirus aspect, obviously the impacts are well known to all of you. Of recent times, however, new issues have arisen in terms of our relationships, in particular with China, obviously a very major trading partner, and due regard needs to be given to those issues in the context of Diane's supply chain examination and Brendan's general comments about trade flows. Slide, please. Maybe one more. Thank you. So what's happened? Oh. The time lapse is defeating us here. If you could go back one slide, please, Kate. That's it. So what has happened in the last 2 weeks to I suppose, create a particular focus on China? Clearly, China, as I said earlier, a highly significant trading partner. Brendan's discussions, fundamentally are pivoting around the north-south trade lanes in terms of sea freight. Diane's air freight schedules under coronavirus conditions have a lot of Chinese destinations. China is important. So what has happened recently to provide additional focus on this particular trading partner? So we had the, I suppose, the relative shock of Australian goods having anti-dumping duties imposed on them. That of itself is unusual. Australia prides itself on having unsubsidised and generally competition consistent pricing for its goods in international markets. The number of actions against Australian goods over the past 30 years, in my experience, I can count on one hand. So it's a very rare event. The other peculiarity in this, and it is a significant one, is that it's been applied to a commodity good, barley. And why is that unusual? The trading structures, of course, around commodity grains, etc., are such that it's very, very difficult to envisage sub-sale values for these kinds of goods. So the shocks have been significant around the realisation that we have a trading partner that will impose anti-dumping duties against a commodity grain from Australia. The envisaged duty rates are 80%, which of course is a significant inflator of the commodity price. The second point adjacent to the idea of anti-dumping duties relate to the dishonouring of certification documents. This has led to the refusal of shipments. We have the example of chilled meat products from 4 abattoirs being refused entry into China. Very, very significant moves. And along with that, increasing focus by Chinese border authorities on free trade agreement related documents such as rule of origin. Consequences of that are also the delayed passage of shipments through the border and increased landed costs. So a couple of these are not new. I mean, we've certainly seen in the past that certification arguments have occurred in the past to cause difficulty with chilled meat. Rules of origin certificates and related documents have previously been contested, but the combination of these three ideas in one place at this time, of course, have raised significant concerns in the Australian exporting community, and as you're all very well aware, significant political concerns in Canberra. Slide, please. So as I've said, we have existing examples where barley and chilled meat have been the subject to controls or refusals at the Chinese border. Coal's another interesting one that crops up from time to time. My prior experience with coal has been that free trade agreement status has been denied for shipments. Obviously, there are other testing aspects to coal shipments that are contestable by border authorities. And it is, of course, possible that other commodities such as iron ore and other grains will be subject to those kinds of controls. We hope not, of course. It's important, I think, though, to extend the logic in these times. So obviously, there are mechanisms that we've seen in the past that are being applied now and that may be applied in the future that rely on challenging certain aspects of information or accompanying accreditation of Australian goods into the Chinese market. So what kinds of things are at risk going forward in the current environment? Fresh and organic produce are obvious ones in my mind. They have been delayed in the past. What's held them up? Biosecurity, origin and certification documents are being challenged for their accuracy and their relationship to the actual shipment. Similarly, with cosmetics and nutritional products, there are testing certifications and labelling requirements that again are contestable to the extent that they have terminology or rely on tests that are under question by Chinese officials. Now, a lot of you may be saying as I speak, well, cosmetics have been stable for a long time, or my business has been sending it into China without contest in the past. The fact is that a number of businesses have been in that situation before, and the ability of the border authorities to stop and question is not limited by accuracy. It's not necessarily about the correctness of what you're putting forward. It's whether or not tests are applied at a particular point in time to either slow down or totally frustrate shipments. Finally, an example that came to mind to me this morning as I was thinking about it, wine in the past has been a commodity export that has been contested by Chinese customs authorities. We have some very, very significant examples over the past 2 years of restraint or frustration of trade. Where has that found its centre in these goods? Again, certification, labelling, risk of counterfeiting, and Australian origin have been issues that have been examined by Chinese border authorities. Next slide, please. So to wrap these concepts up a bit, obviously, you know, it's not my role today to go through every tariff classification and every good and take apart its vulnerabilities or its robustness in the current trading environment. But there are things that, as businesses, as exporters, that need to be contemplated. And even for existing ones, your experiences are greater than mine in these areas. But the fact is that trade is a diplomatic and policy instrument of the Chinese government and is chronically used in that context. So it's not about having a tariff rate and a rule of origin and putting it to one side. It is actually a contestable set of ideas. So we need to be cognizant of what the broader, if you like, trading environment is, and that involves politics, it involves relationships between governments and a whole range of other things that will affect your business regardless of what you do. How do you start to look at the issues that are key in terms of giving you some kind of buffer against these bigger picture activities? I will say to you that compliance needs to be considered as an equal part of the equation when trading with China. No gaps can be tolerated in terms of these matters, because the more gaps you have in your trade, and what do I mean by that? I mean your documentation, I mean your compliance of product against rules, etc. The more gaps you have, the more likely you are to be picked out for sustained delays or extra costs. Finally, the Department of Foreign Affairs and Trade and Government exists to help businesses such as yourselves to the extent that you find yourself in a contest with border authorities in China. What do I mean by that? They need to intercede on your behalf to the extent that you're doing the right thing in compliance with our trade agreements and with Chinese law overtly. They are the ones who can actually shift the dial for you. So I urge you to pick up the phone and use the Australian government when these trade issues come up, because ultimately it's probably not going to be about you alone. It'll be about you and 100 other businesses in a similar circumstance. So drilling down to your individual businesses, how do you approach these kinds of problems? How do you reduce the risk in trade with China at this point in time? The no gaps approach says you need to align all of your documentation with your goods in order to make a consistent package of approach for trading authorities in China. You need to make sure that this information is in the right place at the right time for dealing with statutory reporting and any queries that may come up during the process of importation. China and Australia both have ruling systems, so you can drive out risk by getting rulings from the relevant authorities at the border, agreeing that your goods are compliant. The sum total of all of these things means that you're doing everything you possibly can, and you give our government or foreign officials no doubt about how your goods comply with requirements. Finally, as Diane rightly pointed out and Brendan mentioned in some of his comments, your ability to manage your supply chain is a key factor in what is presented at the landing point of your goods in another country. It is yours, your responsibility, and it'll be your deficit if it goes wrong. So you must manage your supply chain. Thank you for your attention. I've gone a little bit over time, but in practical terms, the 4 points. Thank you, Virginia.
Thanks, Bill. That's terrific, and that's a perfect segue now into Richard Young. Richard has a professional international logistics moving service. He goes to over 100 countries, and I think Richard, you'll be able to give us some very good insights. So over to you. Thank you.
Thank you, Virginia. Thank you, everyone. Next page. Just to give a brief introduction about REX. Next page, please. We have an office and a facility in Melbourne. Next page, please. And also we have 5 offices and 3 warehouses in China. Also we have a 1 Bonnie warehouse in Ningbo. So that's what we do. Next page, please. And we have some Australian brands to export to China, and also we have some the Chinese importer to procure the Australian product in here. So we do some international freight forwarding. We got some warehousing service, and we do pick and pack in China, and for some e-commerce business. And we got some IT solution because e-commerce business always need the IT connected. Next page, please. So for the COVID-19, so we can see some the change during this period. But before we talk this, we have to talk about the difference between the general trading and the e-commerce. So a lot of exporter in Australia right now consider the cross-border e-commerce to enter into China. So it's a good channel. There's no need to do the level registration and also avoid CIQ. Although CIQ merged with the customer house in China, but still they have the regulations still there, the team still there, the procedures still there. And also there's can enjoy the duty free. Although we have the free trade agreement with China and between China and Australia, but there's still some commodity charge the duty. So in this channel, there's no duty. So especially for the dairy product, I mean, especially for the baby infant formula, and also for some healthcare product or healthy supplement, this kind of product, they need a special import permission. But in this e-commerce channel, there's no need. So a lot of brands, when they taste the water or for their new SKUs to China, normally they found this way is good. And for general trading, everything is the same. It's same. Everybody know that it's just a pay duty, and they got all kind of documentation done. Next page, please. So we can see the change during the COVID-19. In China, before Lunar New Year in January, everybody purchased a lot of things. Lunar New Year is very quiet. During that period, we have the lockdown in Wuhan, also other cities. So we can see the offline business got some serious problem, especially some restaurant or bars closed, some meat, seafood, lobster, this kind of a fresh product. So got some hurt, and that means less and less demands. So, but on the other side, the online business still increased rapidly because in China, although there's a lockdown, but the courier, the business still go ahead. So that means it can deliver to door, although they cannot deliver to the actually door, but they can go to the residence in front of the residence, and you still can pick up the things. So a lot of people purchase the product online. So especially for the product as the infant formula, and also some immune concern, the healthy supplement, this kind of thing increased rapidly. Formerly, vitamin C is a very basic vitamin. It's the requirements are not so strong, but during this the season, we can see the big increase and big jump of the demands of this product. And also we can see some the probiotics and also lactose-referring. So this kind of things also big demands in China. So that's a change. So besides this kind of things, we can see that some new change for the future demands. So some we received some requirements from the China side. That means they want to OEM some product. So for the concern about how to build up the immune or this kind of things, that's very good for us. But so that means we can see online, offline is a big difference. Online decreased a little bit, but online increased rapidly, but offline decreased seriously. The next page. So for the capacity of transportation, Dana and Brendan already mentioned that So, but we can see the data. So for this kind of thing. So formally, we have about 100 flights every week to China. Right now, it's just 5 per week. So it's quite hard to come to China. The charge increased rapidly. The voyage, the decrease from formally it's about every week, got about the 4 or 5 voyage, and then right now just 4 or 5 per month. And a lot of shipping line, they have a license. That means that they got a group. For example, Hyundai, Costco, or something like that. They make a group of 4 or 5 shipping lines. They share one vessel and then come to Melbourne and then return. So in that case, so we can, although they have many shipping lines still serve to China, but everybody just share one vessel one month. So that make the space less and less. So you can see a chart. So that means every month the shipping line normally give a forecast for the next 4 weeks, even long. So you if you got some cargo to China, so it's better to check more shipping line to get this kind of information. So for next page. So how to survive in the limited space? By air, so you have to you think about the thing, not only just a contact with the freight forwarder to get space. So because the space is limited, the person who want to pay higher, so nobody can get a space. But so the way is you have to think about some low value products such as a shampoo or this kind of things. So the better think about send it by sea. So you can when you can produce the product in advance, why not just send it in advance a little bit, and so you can save some cost. And although just there is some capital problem, that means when you send by sea, you receive money a little bit slower. But on the other side, we already get all kind of government support in the financial. Why not just think about this shipment is another way. And some urgent shipment is a high frequency and a low volume shipment. For example, you have a 3 distributor or 5 distributor in China. So normally you send the shipment to them. Each a shipment just for example 100 kilo or 50 kilo can be very expensive right now. Why not you just consolidate all the shipment into one shipment? For example, just you have a 5 consolidate maybe together just a 450 kilo into one shipment. So you can have, if you have more the weight in one shipment, you can negotiate with the freight forwarder a little bit cheaper price. On the other side, 50 kilo or 100 kilo always a very high price. I mean the unit price. So that is another way. And also there is if you consolidate all the documentation into one shipment, you can save the customer clearance charge, airport charge, all kind of even drayage. I mean the trucking charge. So this is another way to save some cost. And then when the cargo arrives in destination, you can use the main distributor to clear the goods, and then just from China side is separated into 5 shipments and delivered to each warehouse. It can be very cheap. So that is another way you can save some cost in by air. By sea, so so I already mentioned last page is that means you have to get some with some other shipping line. Some big exporter, they normally contract with one shipping line. They can enjoy very good rate and they can enjoy very good service. But right now, different situation. Even you have volume goods, but the shipping line have no space. You contract with the one shipping line, but they cannot fulfill their all their space for you one exporter. They have to balance everything. They have a lot of royal the clients. They need to balance everything. That means they cannot fulfill the all space to you. That means that you in this period better you consider contract with some temporary contract with some other shipping lines, or you can get in touch with some other freight forwarders, get some space. The most important thing is to send cargo out, not just think about just use one shipping line and wait. So that is another way to think about this shipping. And also there is some exporter, they just use raw material made in Australia, but they use a packing material in China or other Southeast Asia area. So the space from Australia to China or to other area is limited. That means on the other side, from space from other side to Australia also limited. So you have to think about it in advance for the raw material or packing material, the leading time. So think about the whole supply chain, not just about the exporting. So it can make everything more easy. If you can produce all the things in advance, 30 days or 45 days earlier, so it can make everything smooth than just make everything very tight. So that is another suggestion by C. Next page, please. So for the besides the general trading suggestion, there's some suggestion for e-commerce. So some for a lot of e-commerce business, once they taste the water, they normally use the courier service from Australia to China. I mean the courier, not only the Australian Post. Australian Post always a little bit higher cost. That can be a $12 per kilo. But some Chinese invest the courier company just paid about $3.5 per kilo. So much cheaper than Australian Post, but the problem is that formally they can serve very efficiently, normally take about 5 working days or 10 days, arrive in China, but right now can be 4 to 6 weeks. So that's got some problem. When you do a promotion online, your clients receive the goods in 4 or 6 weeks, and that means that majority online clients can reject the order whenever they don't want. So that is the regulation e-commerce in China. So that means during the 4 or 6 weeks, maybe according to our investigation, 30% of the order can be canceled. So, but your order is on the way. You cannot stop that parcel. So that means you lost the payment and also you lost your parcel. That means you lose 2 things. So you have to consider about this kind of thing. So the way for this kind of a solution is when you think about live streaming, you already invite some KOL to do promotion and send some bulk shipment to China to do pick and pack in China. So for example, you already select the Taobao, which belongs to the Alibaba group, to do the live streaming for you. That means the better you use Cainiao. It's a logistic company and their Alibaba group. They can make everything smoothly. So that means that their ERP system, WMS system, also well connected with the e-commerce system. So another way is if you select some other KOL, such as a Redbook or some TikTok, this kind of a KOL, you can select a public or body warehouse to do the pick and pack, such as our company. So that's the a solution for the parcels. Another thing is the direct purchase from the e-commerce. So normally the big top 5 companies such as Alibaba Group is Tmall, or JD, or Koala.com or VIP.com. They place bulk order to the brand holders. So, but e-commerce business normally they place order every month according to the data of last month's sales. So that means each order can be up and down, and then sometimes it's a small shipment. You have to consider about this. All this kind of a shipment can be consolidated into one shipment. As I suggest, if you already got last year data or last 6 months data, why not just consolidate all the shipment into one 40-foot container or a 20-foot container and send it by sea shipment in advance to a Borneo area to China. And then whenever each e-commerce company want to give you order, you can give a quick feedback and send just 1 cubic meter or 2 to their Borneo warehouse. Can be much quick feedback. You can, I found a lot of brand during the February or March, they have order, but they cannot send it on time. They already paid some promotion fee, but they cannot reach, the cargo cannot reach China on time. That means that they lose the promotion time. So that's really a pity. So that's a direct sales. So so in the conclusion, so we what we're suggesting is you normally e-commerce business have about just a yearly promotion. They normally give you a 12 months forecast how to do, for example, June 18 or November 11. Even every month there is some small promotion. If your marketing team already consider this kind of things with a certain e-commerce company, you have to think about the production in advance. So you have to think about the supply chain in advance. You prepare all the things to China in advance. If you have no bonnet, if you cannot send to China in advance, you may lose the chance to do the sales. So that is the things. Think about the marketing thing. So another thing is consider about the customer experience. Although it's the cross-border e-commerce has less the limitation compared with the general trading, but still there's some things the product have to register in advance. It take about 5 days or something like that. Some brand already send 1 shipment to China, but they did not do the registration yet. Wait another 5 days. So sometimes this kind of urgent thing happen. 5 days is 5 days, very important. So think about some the customer experience regulation. Sometimes they change differently, because in China we have more than 100 cities accept cross-border e-commerce cargo. So although we have in China, we just have one policy, but the different city have a different explanation. So just think about this kind of thing. Next page, please.
Richard, I just noticed we've gone over time a little bit, and I do apologise that to our people listening in. So I think we're just on your final slide now. Is that right?
Yeah, just a final.
Thank
if you got some question, just let me know. Thank you very much.
That's terrific. Oh no, thank you. And I do thank all our speakers. I do apologise we've gone over time, but it's been such a terrifically interesting subject with some really great insights from you all. So Diane, Brendan, Richard and Bill, thank you so much for sharing this valuable information. I think it's important to get the facts and we can make rational decisions. Also, obviously your contact details are on the slides, which we will share with participants. So to all our guests, please don't hesitate to get in touch with these experts if they can help in any aspect of your getting your goods to China. We'll also have key takeaways, which we'll send out following the event. We're running a series of ready to rebound programs and sector specific events as well. So please keep an eye on your inbox and on your website for further details. Thank you so much for attending today. To our speakers, thank you very much for your time, and we look forward to catching up again soon. Stay safe, stay well, and stay optimistic. Thank you so much.
Thank you very much.
Thank you.